This is Trade. I'm Shery in Seoul in Gwanghwamun Square as we follow the political turmoil surrounding President Yoon.
I'm Haidi, Stroud-Watts in Sydney, where the market has just opened here. The top stories this hour. Asian stocks are set for declines after Wall Street's first retreat in 5 sessions. Trade is now focused on US jobs data that could sway the Fed on a potential rate cut this month. South Korea's president remains silent after his short-lived declaration of martial law, with his party set to block impeachment. We'll be hearing from the opposition leader. And Emmanuel Macron says he'll stay on as French president as he searches for a new prime minister, while the far-right leader, Marine Le Pen, tells Bloomberg that a new budget is possible within weeks.
And Heidi, we have breaking news out of South Korea. We are getting the current account surplus right now, narrowing to $9.784 billion. The goods trade surplus also narrowing to $8.1 billion. And this, of course, perhaps not surprising, given that we have seen exports starting to slow down. We had seen a rebound for the month of November, but that pace of gains really much slower than earlier this year. And of course, the concern right now is what happens to the economy if the political unrest continues. I spoke to the finance minister yesterday, who told me that fears of recession this year are excessive. Still, we continue to see protests around South Korea. I am right now in Gwanghwamun, where thousands have already turned out in force this week, trying to really ask for the impeachment of President Yoon. Just behind me right now, you can hear protesters. It's very early. We're in sub-zero temperatures, Heidi, but the protests continue. I've talked to them. They say that they want the president to be removed because of the crisis that he caused with his declaration of martial law, as brief as that was.
Just an extraordinary week of geopolitical and political risks, right, as we continue to watch events in other parts of the world, including the latest when it comes to France. After the toppling of the government there, we saw the far right and the left really coming together in that no-confidence vote. We're now hearing from Marine Le Pen saying that France can deliver a budget in a matter of weeks if the next Prime Minister is willing to narrow the deficit more slowly. We know that whoever President Macron chooses for his next PM, they're going to face the same set of fiscal issues that toppled the government just over the past few days. So he must choose someone who can get his agenda back on track, but still that's a person to really navigate what is really an extremely fragmented political environment to get that 2025 budget passed. We're hearing a number of candidates being floated at the moment, but we'll continue to watch kind of who potentially gets that top pick. We've got the youngest defence minister, who was appointed in 2022. We've got some former prime ministers and interior ministers in that mix as well. Let's take a look at how we're shaping up into this final Friday after it has really been a truly turbulent week globally. Take a look at how we're seeing S&P futures a little bit softer at the moment. We're seeing really a little bit of risk aversion as we head into jobs data day for the US as well. Jobless claims rising to a 1-month high before that key payrolls data. We had some interesting, of course, private payrolls numbers with the ADP data a little bit earlier, as well as just some soothing Fed speak throughout the course of the week. We're also watching the euro there as well, looking pretty flat at the moment, although, of course, the outlook when it comes to the common currency is looking ever murkier. Oil prices are holding pretty steady at the moment, under $70 a barrel. OPEC Plus bracing for a much longer mission when it comes to what they can do to defend oil prices. They're accepting that that is going to take much longer after they agreed for a third time to delay the return of production to the market and to slow that down as well. Let's take a look elsewhere as we see just the start of the staggered trade here in Australia. We're seeing after sort of a few sessions of pretty resilient trading, and this is a market pretty close to record highs, a little bit of a pullback, some profit taking this Friday, really fluctuating there in the very early part. We have seen a little bit of leadership when it comes to the banks and consumer shares this week. Chicago Nikkei futures looking pretty muted there as well. When you're taking a look at currencies, the yen very much just holding at that 150 level, just regaining that strength as we hear potentially some of the BOJ doves sounding a little bit more hawkish now. Shery.
Heidi, as South Korea's parliament moves closer to a vote on President Yoon Suk-yeol's impeachment, the opposition says it may be difficult to get enough support from the ruling party. Democratic Party leader Jae-myung told us that the situation remains in a state of flux.
정치는 결국 궁극적으로 국민이 하게 되는데
Ultimately, politics is done by the people. And even if the result of the vote may go against the will of the people in the current situation, the vote result may change next time if individual members of the parliament are pressured heavily by public opinion. That's what I think.
Bloomberg Seoul Bureau editor Danny Thomas joins us with more. And Danny, of course, technically speaking, given that the impeachment motion was already submitted, the vote could happen as early as today. So why are we delaying this process? Not to mention that, is there a chance and the risk that the ruling party may just boycott the entire process?
Yeah, hi, Shery. So, no, that's a good question. I think they have to have a 72-hour window before a vote can be held, and this also gives the opposition party to get that 8 or 10 members support from the ruling party to get it to swing the vote in their favor. So there will be a bit of a horse trading, and the vote now, which is likely to happen on Saturday, gives them that extra time to kind of gather the momentum, go after some of the members who are still undecided. So yes, it's still up in the air, and as you have rightly said, there is still state of flux here. But the public opinion will be clearly known today when the Gallup poll comes out at 10 a.m. and which will show where the approval rating for President Yoon is, which is already, he was struggling with his approval rating, and today's numbers will just give a further indication of how unpopular a leader he is.
Is this a matter of time in terms of whether or not or when we see an impeachment? Because certainly the opposition mood seems to be, well, it may take months, but it will eventually happen, particularly as you see, even in the early hours of this morning, the protesters and the level of public discontent that we're seeing in response to the chaos of this week.
Yeah, that's right. I think it's a matter of time now when this process takes and which shape it takes. As we heard yesterday from the opposition leader, if they don't succeed this time, there will be more pressure, and eventually, I think the verdict is pretty clear. It's just a matter of time how he goes, whether he resigns of his own or he decides to follow through the whole impeachment process, which may drag on. And that's the kind of the discussion and the debate the ruling party is trying to have, to how to sever ties in a way that doesn't prolong the frustration of people and also the investors. So that's a decision. I think whether they go for the kill in the first go or they convince him to leave the party, which is a bit more of an easy way of getting out of this messy situation. And those are the discussions that we will wait and see.
Bloomberg Seoul Bureau editor Danny Thomas. They always continue to watch the developments of the day. And turning to France, where French President Emmanuel Macron says he will not resign before the end of his term in 2027. He's also promised to appoint a new premier in the coming days after his previous pick, Michel Barnier, was evicted from office in a no-confidence vote. Meanwhile, far-right leader Marine Le Pen told Bloomberg exclusively that France can deliver a budget soon if the next PM is willing to narrow the deficit more slowly.
Well, it's a matter of a few weeks. We'll discuss it with the new Prime Minister. We'll work together.
Let's bring our Bloomberg opinion columnist John Authers. And John, we're seeing this political fragmentation on the basis of economic division broadly around the world, right? Yeah. Even aside from South Korea and France, we're seeing Germany, Japan, elements of that as well. How do we explain that?
Well, I mean, part of this, I wrote about this in a column recently, is that list of countries you just gave is very much like a list of the countries that have benefited most from Pax Americana, from the post-war settlement world in which they've benefited from American aid from the globalized order that evidently is now in retreat. It's not therefore surprising that all of those countries are now finding it much harder to chart their own course, given that this is a more uncertain situation. I do think in the case of France, there are lots of very serious medium and long-term problems, but this crisis has calmed down very significantly in the last few days.
John, of course, we continue to hear from Macron that he will stay on as president. Yes. Here in South Korea as well, Yoon Suk-yeol wants to stay in power. If we continue to see these protracted political unrest in countries like France, in South Korea, what are the repercussions for global economic growth more broadly in 2025?
Well, it adds greatly to uncertainty, and although that's a big cliche that markets hate uncertainty, it's that much harder to invest, to get things done when you're not sure who is going to be in power. I think in the case of France, the bad news is that whatever happens, we basically have a Congress split three ways between three groups, none of whom want to do business with either of the other two. So very little is going to get done, which means very little that's done, that very few bad ideas can happen, just as no really good positive improvements can be made. Similarly, there isn't a mechanism. If Macron doesn't want to leave before the end of his mandate, it still looks incredibly difficult to force him out. So you have an unsatisfying and lame duck, weak governance in France for the next 2 years or so, but you probably don't have the really serious systemic uncertainty in France that could really create a more dangerous situation. I mean, Korea, obviously, what's just happened in Korea was very frightening. But again, I think the kind of people I talk to, asset managers, have some degree of confidence that the fact that President Yoon seems to have overreached he's unwittingly shown that there is a degree of strength in South Korean democracy, and that it is going to be in a fit state to deal with the challenges as Trump 2.0 begins to change the US relationship with Korea and Japan and China.
Perhaps a silver lining there to be had from the events of this week. John, always great to have you with us. Bloomberg opinion columnist John Authers there. Well, economists expect US payrolls out later to show a big jump in new jobs, potentially adding to bets to a Fed rate cut later this month. Let's bring our global economics correspondent Enda Curran. So we've seen that sort of market reaction, the pullback, quite a bit of anxiety as we get into these numbers. What are we expecting?
It's going to be a strange set of numbers, Haidi. The official forecast, or the market forecast, is for 220,000 jobs created in the month. Unemployment rate staying at 4.1%. If that comes through, it'll represent a huge rebound from the October numbers when 12,000 jobs were added, mostly because of hurricane disruption in terms of not just gathering the data on jobs, but also, of course, in terms of the impact on companies having to let go of staff over that period. So tomorrow's numbers are kind of expected to get back on track to where we were before the hurricane period, but there will still be a lot of noise to iron out. In that, you've got to look within those numbers, who's doing the hiring? Is it still the healthcare sector? Is it mostly the public sector? We'll have to keep an eye out. Also for revisions. Revisions are very important in terms of giving an indication as to how robust the recent strength has been. There's a view out there that maybe that's been overestimated, so look at the revisions for the past few months. And then, of course, we'll have to deal with the idea that if it is, say, a strong number tomorrow, what does that mean for the Fed? I mean, on paper, you might say it doesn't lean towards a rate cut, but there are plenty of people suggesting that the details of the report tomorrow, even if the headline is strong, will suggest the Fed has to cut again when they meet the week after next.
What are we seeing in the broader trends of the U.S. economy right now? Because when it comes to consumer spending, when it comes to really these inflation numbers, how mixed have they been so far? And as you alluded to, what are we expecting from the Fed then?
I think we're literally in something of a transition period right now. Heidi, I mean, the economy, broadly speaking, as we all know, is holding up. We've had a big bump in some of the sentiment indicators on the business side of things, a hint of new orders picking up. We know that the markets are on a tear and consumer spending is holding up. So, the US economy is in a good space, and that's what Fed Chairman himself, Jerome Powell, said this week. But the big story remains, has the inflation story finally been put to bed? We get inflation data next week. That'll be critical. And then, of course, what sort of headspace are the Fed in? Do they have scope? Do they have room for one more rate cut maybe in December this year? We've had mixed signals on that. Fed chair saying they can go slowly. Other Fed board members saying that they can maybe cut again. And, of course, if they do cut, we're going into 25, we'll have a new administration with all new economic policies. I think it's fair to say that the Fed debate will be very much up for grabs. So right here, right now, the economy is strong. It's in something of a transition period. The question is whether the Fed has room to go again this month or not, and then next year is a whole other story.
Oh, another story indeed. Bracing ourselves for more. And Karen, our global economy correspondent there, joining us. Well, coming up next, we're getting the market implications of all of this uncertainty. Crossmark Global Investments will be along with us, and why they favour financials and industrials, tech losing its status as the market leader. That's coming up next. This is Bloomberg. Well, as we've been discussing, it has been an extraordinary week of political whiplash around the world, from the use to the retreat of martial law in South Korea and, of course, the toppling of a government in France. Let's bring our next guest to talk about some of the political implications as we head into next year. Victoria Fernandez is Chief Market Strategist at Crossmark Global Investments. Victoria, great to have you with us. And so does this give us an indication that perhaps markets and investors have underpriced the risk of political fragmentation more broadly, particularly as 2025 holds so much uncertainty?
Yeah, there's definitely been a lot of volatility in markets related to the issues that we've seen. Some of them are things that we were expecting. Some have been quite unexpected. You know, we talked at the beginning of the year about how many countries around the world would have shifts in their leadership and in their governments, and how that could really make a change for policies and for markets. And I think we've seen that. Unfortunately, some of the things like we've seen in South Korea and like we have seen in France have caused some volatility elements, but they have stabilized somewhat. We look at South Korea, the markets obviously took a nosedive right after martial law was declared, but as that was brought back, we've seen them start to stabilize. We've seen central banks step in and put some stabilization and some liquidity components in there to help stabilize that. But again, you know, any kind of political element causes concern and causes uncertainty. That's going to make the markets react accordingly.
Victoria, what do you make of all of the measures that we've seen so far from financial authorities? I spoke to the finance minister yesterday, who was saying he could implement more measures if needed. Do you think it will come to that? And what are the expectations of how the market turmoil will unfold, given that we're headed towards that impeachment vote?
Yeah, there have been some stabilization measures that have put in place, and there are liquidity provisions that are there for the equity markets. We've seen stabilization funds get implemented both for the equity market, I think it's like 10 trillion won, as well as for the bond market. And we've even seen some liquidity elements come in terms of foreign currency repos to help with the FX markets as well. So I feel like the markets have some stabilization effects that are in place that should help tremendously. It's the same type of thing we saw in the US when we had regional banks start to fail. We had the central bank step in with a lot of liquidity measures to help support that. You're seeing the same thing here. So I think you are okay for right now. As the impeachment vote gets closer, obviously there could be some turmoil there. You've had a lot of people come out and say this could actually be a buying opportunity in South Korea, because looking longer term, things should stabilize pretty quickly once the government is put back in place. We'll have to see. We can't see into the future, but it seems like the central bank is ready to tackle whatever they may see.
Yeah, opposition leader Jae-myung telling me yesterday that investors should actually buy the dip. But Victoria, relatively speaking, though, given the ongoing political uncertainty here, what are some of the markets that you would be more encouraged by in the next few months relative to South Korea?
So obviously, the U.S. market has had a lot of strength associated with it. There's a lot of seasonality serving as a tailwind for the equity markets in the U.S. And with the new administration coming in January, that seems to be much more business oriented, that would be advantageous in regards to tax cuts for consumers and for corporations, with deregulation elements probably something that we're going to see. Then I think that the U.S. market has a tailwind at its back in order to help it continue to do well as long as inflation remains contained. We know that tariffs is going to be an issue globally. I think we have to separate tariffs from the U.S. as it relates to China and the rest of the world. As Bessent was nominated for Treasury Secretary this past week, you saw the repercussions in regards to tariffs globally, the element of that come back a little bit, and that was a positive for the markets. I think that's different with China. That is something that President-elect Trump can do somewhat unilaterally coming in, so I would stay away from those markets, and I would look more towards European and U.S. markets. Europe, I know, has been struggling, but if you look at the French consumer, even with everything that's going on there, France being the second largest euro area economy, the consumer is spending. Real spending is up about 2.4% year over year. Their savings is going higher. Wages are strong. So I think you can find some elements probably there that would do well also.
Victoria, of course, we're heading into payrolls day in the US.
Victoria,
what are your expectations for this economy and really where this rally goes from here, right? That leadership of the Mag 7, of tech record highs. Can we push further or can we broaden?
Well, hopefully, Heidi, we're broadening. That's what we want to see in order to have a sustainable rally. When you look at tech, you really have to look at it separately, kind of separate out the semis. They have been underperforming tremendously. They have the least amount of their constituents in that sector that are above their 20-day highs. So semis are really struggling, but you could look elsewhere in tech, things associated with AI as well, and utilities where you're going to be looking for energy associated with AI. Those could be areas that start to have some leadership. Financials obviously is an area that we have liked for a long time with the steepening of the yield curve, and we think you'll continue to see the momentum in that sector go forward. But jobs are going to be critical. I don't think an upside surprise will upset things, but if the numbers are really low, that could mean the Fed cuts rates even quicker than what people anticipate.
We'll be watching that data very closely. Victoria Fernandez, a chief market strategist at Crossmark Global Investments. We have more ahead on the Asia trade. This is Bloomberg.
We do have some breaking news from the Argentinian central bank. The Argentina central bank lowering its benchmark rate to 32% from 35%. This as we start to see signs of life, but still, of course, economists seeing inflation at over 100%. All right, let's get you some breaking news when it comes to Japanese economic indicators. Just crossing the Bloomberg at the moment, we're seeing household spending numbers. Household spending for October actually on a year-on-year basis falling 1.3%. On a month-on-month basis, it was a gain of 2.9%. When it comes to cash wages from the same sample, we're seeing a gain of 2.7%. Labour cash earnings rising 2.6%. That was exactly in line with estimates, and real cash earnings were unchanged. The estimate was for a very slight contraction there. And this, as we're starting to see the Bank of Japan rate hike bets really retreating as traders count down to what is expected to be a key end-of-year meeting. We've seen that jump in the yen, JGB futures falling. We heard from one BOJ board member saying that he doesn't object to a rate hike, this coming from someone who was previously quite dovish. But of course, so much of that is data dependent, and so much of that also dependent on some of the uncertainties around what the Fed will do as well. We had some press reports on Wednesday saying that the view is growing within the BOJ that a premature increase should be avoided. Let's bring in for some analysis our Tokyo economy and government reporter Erika Yokoyama. So, Erika, as you take a look at the numbers when it comes to household sentiment and spending and wage growth, how does that paint the broader picture of what the BOJ is considering? Because it seems like there's a lot of uncertainty as to what the correct next couple of moves should be.
That's true, but if we looking into the data, the wage data only, I think it is a sign of progress towards the positive economic cycle. So keeping the door open for the BOJ to consider additional rate hikes sometime soon, including on one in 2 weeks. But as you said, there have been a sort of like mixed report and some remarks from the BOJ officials. You know, for example, in the Nikkei interview last weekend, like Ueda said, data is on track and additional rate hike may be nearing. And while like the other report suggesting that the BOJ might push back the rate hike a little bit. So we still kind of need to see both risks coming up. But in any case, what we really should focus on this time is probably not these on backward-looking monthly wage data, but on wage trend going ahead through Shunto negotiation that has been started in earnest.
Yeah, tell us a little bit about how we're expecting that to unfold, because last time we spoke to union leaders, they were really expecting to increase the wages of especially small and medium-sized businesses.
That's right. I think that actually the Shunto negotiation has started on a very bullish note. And I'm also speaking to many union leaders, labor union leaders, and they are all pretty ambitious, setting the similar or even stronger target than this year for upcoming wage negotiations. Then actually some companies are already responded to these strong demands by promising a significant hike. So I guess there are very positive signs, but at the same time, as you said, we can't be just fully optimistic about the outcome. You know, for example, like smaller firms, they are increasingly voicing concerns that they can't just continue wage hike as inflation has been squeezing their profitability.
Our Tokyo economy and government reporter Erika Yokoyama there. Now, South Korea's opposition leader admits it may be difficult to get enough support from the ruling party to impeach President Yoon over his decision to declare martial law. But Jae-myung tells me he remains committed to removing the president, even if Yoon survives the initial impeachment vote.
정치는 결국 궁극적으로 국민이 하게 되는데
Ultimately, politics is done by the people. And even if the result of the vote may go against the will of the people in the current situation, the vote result may change next time if individual members of the parliament are pressured heavily by public opinion. That's what I think.
The martial law declaration really caught international partners by surprise, especially key allies like the United States. How are you going to restore confidence in the relationship with South Korea?
아마 전 세계에서
It is probably a very confusing situation for the rest of the world to see South Korea. Something that couldn't have happened has happened. But it's not a common situation in South Korea, and it's a problem caused by the very special character of a certain individual named Yoon Suk-yeol. It can be seen as a situation where disease penetrated into a healthy, living thing called Korea. Usually, the president mobilizes the military and the police to attempt to destroy the constitutional order and strengthen his power through a de facto coup. But this was thwarted by the people in the National Assembly within a few hours, wasn't it? This shows the healthy state and the true power of Korea. This person, Yoon Suk-yeol, is just a special, exceptional, and temporary phenomenon.
We have seen Japan also play an active role in the trilateral alliance with South Korea and the United States when it comes to pushing back against not only North Korea, but also against China. What will the relationship with Seoul look like under an administration that's led by you?
대한민국은
Korea is a peninsula located between continental powers and maritime powers. In fact, it could be very diplomatically and internationally vulnerable. But on the other hand, it has opportunities at the same time. We cannot continue to be hostile in our relationship with Japan.
The so-called Korea discount has been in place for a long time, even before the Yoon administration. How do you plan to overcome that, especially when it comes to issues like short-selling bans?
윤석열 대통령 이전에 있었던 코리아 디스카운트는
The Korea discount that existed before President Yoon Suk-yeol was caused by the division of the country and military confrontation. And there was also the abuse of corporate management control system and stock price manipulation. So, we need to improve these things institutionally. The special problems that have risen in the Yoon Suk-yeol administration, the escalation of geopolitical risk, absence of economic and industrial policies. These things will be resolved when the administration ends and the risks that existed before that will be institutionally improved. Short selling is a necessary system. We need to allow it reasonably and fairly within the necessary boundary to make sure that it is not abused. We need it for the benefit of MSCI.
Korean Democratic Party leader Jae-myung speaking to us in Seoul as we get more breaking news at the moment. We are now hearing that they've held an emergency meeting on the macro economy again here in Seoul early in the morning. The likes of financial authorities now vowing to really have financial and FX markets stabilized, that they're actually showing some stable trends at the moment, and this coming after their daily meeting to review markets. Of course, we have heard from the finance minister himself here on Bloomberg TV talking about more measures that need to be implemented in the future. They would go ahead and do it, that they will continue with the real-time monitoring over the economy. So we continue to see moves by authorities here in South Korea to stabilize markets and also really rein in any impact of the economy. And this, as we're hearing from local media, 동아일보 as well, the South Korean President Yoon Suk-yeol's address will be unlikely before the parliamentary vote that is now expected to happen in the evening of Saturday. Let's get more from Daniel Pinkston, expert advisor at the Korean Council for Peace and Cooperation. Daniel, great to have you with us. He's also a visiting professor at Yonsei University. What do you make of the latest proceedings here in South Korea and the fact that the opposition leader is not pursuing a vote that could technically happen as early as today? Why hold it on Saturday? And do you expect him to have all the votes necessary to pass this impeachment bill? It seems we have lost Daniel Pinkston at the moment, but we'll try to get another connection with him, of course, as we continue to watch the latest developments here in South Korea. We are expecting Haidi, that vote to happen on the evening of Saturday, but at least local media saying that we might not hear from President Yoon again until then. More ahead on the Asia trade, this is Bloomberg. In fact, we will go back to the guest. We apologize for the technical inconvenience right now, but I'm being told that the guest is actually ready. Daniel, let me reiterate my question to you. What do you expect to come out of the vote that could happen on Saturday?
Well, we're in that period of limbo right now, and it's going to be close. It's interesting because the PPP party leader, Han Dong-hoon, he's a rival of Yoon. He voted to rescind the martial law order, but he has said that his party will not support the impeachment. So we'll have to see. They're going to have a luncheon meeting today with the senior party officials. I think history and the current situation in Korea will weigh on him very heavily. And if the impeachment does not pass, it's going to be very, very difficult. If Yoon remains in office, One of the reasons he declared martial law was because of the deadlock in the National Assembly. If he's not removed from office, it's going to be much, much worse. I think he'll be a zombie president. There will be no cooperation in the National Assembly, and I think this will drag on longer. Han has presidential ambitions himself, so he's probably weighing this and concerned if Yoon is removed from office quickly and there's a new presidential election, Jae-myung may become president, and there's a lot of opposition to Lee. So it's bad choices for Han, and we'll see what happens tomorrow.
And of course, there's a reason why Jae-myung wants to have this vote very early as well, right? There are investigations against him right now, and he's appealing a court decision of violation of election laws. So how does timing matter in this process?
Right. So, it depends on the legal process or political ambitions and those that are jockeying for future presidential runs. So for Lee, he would like to conclude this very quickly, kind of push these prosecutions and investigations aside. And Han is thinking if Yoon can stay in office and this can drag on and he can be weakened and then either resign or have an election in a couple of years when his term ends, by that time, Jae-myung could be tarnished by all of his legal woes and corruption scandals himself, and this would position Han well. But I think that would be a huge miscalculation on his part. I think the Korean people would remember that, and it would be viewed as a self-interested political calculation for his political ambitions rather than what's doing right for the country. So we'll just have to see what he decides and what members of his party decides.
The silver lining is that there's been a lot of sort of applauding of the institutional strength of the ability to restore order and democratic norms and the market backstops that have very swiftly come into play here. If Yoon is not removed, if he is not impeached, or if that vote doesn't go through, how much of a blow do you think that would be to that reputation of Korea, particularly from international investors and the international community and allies?
Well, I think there's two ways to view it. I think in the shorter term, of course, there will be market disruption and lack of confidence. But I don't think Korea would tumble into chaos or instability or some kind of conflict zone. I think that's very, very unlikely. So investors should be safe in their positions. However, the lack of confidence, lack of predictability and certainty in society and in the legislative agenda, politics, and all of that will raise a lot of questions, raise a lot of questions about confidence in the leadership. Just on a very basic, level, the fact that Yoon used this instrument, which is a very serious instrument, only to be used for national security purposes, he used it for a political purpose. And if he remains in office, the question is, how could he ever be trusted not to use this again? And I think everybody at about 5 years old, they hear the story about the boy who cried wolf, right? So the next time, if there's a real national emergency and martial law really needs to be declared because of an imminent military attack or something like that, people might think it's a bluff or not take it seriously. And of course, adversaries can take advantage of that as well. So it's a very, very serious charge. Undermines the credibility of the president. And then the defense minister, incoming defense minister, or any new defense minister or his senior aides, how can they reassure the public that they are going to reject any unlawful order? Can people trust that they're not going to go along with some kind of scheme like this in the future? So, and that also applies for allies. The U.S. is a treaty ally here. There are a number of other allied nations here under the United Nations command. So this kind of behavior, which most people are looking at as bizarre and strange and very stunned by this, people are still scratching their heads trying to figure out why Yoon did this. It just undermines the credibility of Yoon and his administration.
Yeah, you say the number of people have, and in conversations we've had as well, right, in terms of why, how could he have thought that this was a good idea, certainly. But we've talked about the international sort of perception and market pressure. What about the domestic pressure and the perceptions that we're seeing being held by voters, right? Clearly protesters, even protesters very early, very cold in the morning, where Shery is in Seoul right now, and we're not expecting that potentially to dissipate either. Is that the ultimate domestic pressure for what happens next?
I think ultimately, and that will build if the impeachment vote fails. A poll yesterday showed that about 75% of the population supports impeachment and feels that Yoon should be removed. About 70% said his martial law declaration rises to the level of insurrection or treason. It's across age groups, gender, political ideology, affiliation, even those who identify as conservatives. It was a majority, about 52% to 49%. Support impeachment. And I think the level of protest and resistance would rise to very high levels. I was telling someone yesterday, South Korea has a protest industrial complex. They're very organized for that institutionally. They're prepared for it. They've done this before. People I've talked to the past couple of days, I talked to a former colleague who has a young son, has never been involved in any kind of political protest and so forth. Not a radical by any means, very centrist, professional person. But this, she told me, this crosses the line. She will go out in the streets, because I'm sure, hundreds of thousands of people will.
Yeah, protests, the fabric of Korean society. Daniel Pinkston, good to have you with us, expert advisor at the Korean Council for Peace and Cooperation. Coming up next, oil prices in focus again after OPEC Plus defers supply increases for 3 months. More on the energy markets next. This is Bloomberg.
Well, OPEC Plus appears to be accepting that its mission to defend oil prices will drag on much longer than expected. The IEA data suggesting a crude glut is looming throughout next year. Let's get some more from our energy and commodities editor, Andrew James. And we're sort of setting up for this, right? Protracted even as the process of delaying this meeting. What were the negotiations like, and what's the sort of reality that's set in going into next year?
Hi, Heidi. Well, as you mentioned, this plan to restore oil production was delayed by 3 months. They're also planning a far more gradual restoration. The original plan was to restore 2.2 million barrels over a year. That's now been delayed to 18 months. It's also the third time this plan has been delayed. The backdrop to this is the International Energy Agency, which is predicting a 1 million barrel per day surplus next year. So, OPEC obviously thought it would be lunacy to start, restoring more oil into an already very oversupplied market. Non-OPEC supply has been surging, particularly out of the US. They're pumping at a record 13.5 million barrels a day at the moment. That's well ahead of the Saudis on 9 million barrels a day. Also strong production out of Canada, Guyana, Brazil, and on the demand side, China has been weak, with the economy struggling to recover there. And also you've got long-term trends like the growing electrification of China's transport fleet. So yeah, all of those factors would have weighed on OPEC's mind when they made this decision.
When it comes to uncertainties for next year, there's the Trump card, right? How are producers sort of potentially positioning for, maximum pressure tactics from President-elect Trump, the tariffs on China, how all of that plays into supply and demand?
Yeah, well, Trump is expected to potentially curtail Iranian production. That could give OPEC a bit of breathing space to restore some more production. The other factor is that if we do move into a severe sort of trade war, that could further damp oil production. So there's a few ways how this could play out. I mean, it's hard to see conditions in the market getting notably better in the run-up to April, when OPEC will have to decide again whether they're going to go ahead with this plan or delay it again. I mean, we have Citi and JP Morgan, they're talking about a continued slide in prices down into the $60 a barrel. Yeah, so I mean, one of the few things that could help OPEC would be if Trump aggressively sort of moved to try and curtail Iranian exports.
Our commodities reporter Andrew Janes there. We do have more ahead on the Asia trade. This is Bloomberg. Let's take a look at some of the corporate headlines we're following. A US federal judge has rejected Boeing's plea deal that could have allowed the company to avoid criminal prosecution over 2 fatal 737 MAX crashes. The judge sided with family members of crash victims, calling some of the deal's provisions inappropriate and against the public interest. The decision may lead to a revised plea agreement. Intel has added 2 semiconductor industry veterans to its board days after forcing out its CEO, Pat Gelsinger. Eric Maurice is a former ASML chief executive, and Steve Sanghi led Microchip Technology. They join Intel as independent directors, with the company facing the biggest crisis in its 56-year history as it works to restore its technological edge in chips. Well, the market opens in Seoul and Tokyo are next as we continue to watch for the political developments happening in Seoul with the impeachment vote now looming. We'll be live on the ground with Shery next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And of course, as we round out a week of political chaos from Korea to France, Shery, it's not over yet as we wait for that key impeachment vote. And there's now kind of ever more doubt being sowed that that vote can cross the line.
The opposition party leader Lee Jae-myung could become the next president if President Yoon were to be impeached. He told me this week that that might be difficult this week, but that he will continue the efforts no matter what. And you can see right now the focus by the South Korean people to try to oust the president. Here in Gwanghwamun, sub-zero temperatures, already more than a dozen people behind me protesting the president.
Shery, let's take a look at the market opens as we continue to watch very carefully Korean assets. Of course, that sort of backstop of both institutional strength, some of the governance measures, as well as market backstops have really curtailed any of these risks of contagion for now. But take a look at the market opens as we take a look at the first sort of minutes or so of trading in Japan. The Nikkei 225 looking pretty flat at the moment. We did get base pay gains coming through at a record that sort of keeps the door ajar for potential BOJ hike, despite, of course, some of the BOJ speak that we've had recently, hearing from even kind of previously more dovish members sounding a little bit more cautious and perhaps a little bit more reluctance there to move too soon. The topics we're seeing just sort of fluctuating as we get online here. Dollar yen holding at 150 with that return of yen strength and some of the moves in JGB yields as well. And flipping over to Korea, we are, of course, watching this market very closely given these ongoing political developments in Seoul and where Shery is. We're expecting another day of political protests as well, with vigils being held late into the evening on Thursday. The Kospi is up by about 0.3%. Some of that sort of reaction perhaps to a number of analysts and investors that we've spoken to really talking down the fear of contagion or prolonged crisis for the markets, and also in that respect perhaps you could look at this as a bit of a buying opportunity as well. Here in Australia, where trading's been underway for about an hour or so, this is a picture as we see a bit of downside, 0.3% there. Watching treasuries as we get into some key data for the US. And to that, I want to bring in Garfield Reynolds, who leads our Markets Live Asia coverage. And after what has been a week of, dominance by political headlines, we're also now, of course, returning to the key data point of the week, which is payrolls. It could look a little bit messy.
Could be very messy. We've got the market is pretty strongly favouring the idea that the Fed will cut rates this month. Sitting it's been between 60 to 70%, times a little bit more than 70% chances priced for a cut. So the question is, do payrolls come in weak enough to keep that, to accelerate that move towards it? We've also got the difficulty that the Fed will soon go into its quiet period. So after that, the market will potentially be left guessing, though. Given what happened in September, I tend to imagine the Fed is going to act one way or another to get the market to be convinced either that a rate cut will come or that a rate cut won't come. And honestly, the way everything is set up, stocks are a little bit fragile, and yet the economy is going okay. Inflation is coming down. It seems hard to see too much of a scenario where the Fed would hold. So the nervousness is, should we get a jobs number that makes it look as though they should consider it? That's going to upset a lot of at least short-term trading strategies. Could see a revival, very strong revival in dollar strength, and could see a nasty sell-off in bonds. The alternative is, if we get something in line or even a little bit weaker, that simply confirms that 25 basis points is going to happen. You could get the dollar fading down. It's lost momentum the last few days. So you get the dollar fading down. You get Treasury yields moving down, though probably not too much. We're still talking about 25 basis points, and there'll be a lot of volatility concern around how Jay Powell frames whatever they do at the December meeting, whether he signals that, okay, in 2025, they're likely to shift to not moving every meeting, whereas if they do move in December, that will be 3 meetings in a row.
And Garfield, you talk about potential dollar strength, and that could hit really many different economies. Right here, the Korean won, the worst performance in Asia already, but also we have the euro under pressure, the Japanese yen, of course, we've been talking about it all year long. What are the potential implications of more dollar strength?
Well, more dollar strength could make it harder for central banks elsewhere to ease too rapidly. There's already a concern for the Korean won even before the political events of this week, in the wake of the BOK's somewhat surprising rate cut. That's part of why it was already a poor performer, even leading into the political crisis, and for that matter, because of concerns about the impact of Trump tariffs. Last time round, when Trump imposed tariffs, the Korean won was a noticeable underperformer. So that's an obvious direct impact there. From the point of view of Japan, it's kind of there's the inverse thing. The weaker, the stronger the dollar gets, the easier it is for the BOJ to go ahead with hiking. In fact, you could argue even it needs to go ahead with hiking if the dollar strengthens. The difficulty will be if you get a dovish Fed and a hawkish BOJ scenario, that could set off the sort of sizzling gains in the yen that we saw earlier this year, which ultimately Japanese authorities came to regret.
Garfield Reynolds, our Bloomberg Markets Live Asia team leader, of course, as we continue to look ahead to that BOJ decision this month as well. Now, here in South Korea, the parliament continues to move closer to a vote on President Yoon Suk-yeol's impeachment. The opposition says it may be difficult to get enough support from the ruling party. Democratic Party leader Lee Jae-myung told us the situation remains in a state of flux.
정치는 결국 궁극적으로 국민이 하게 되는데
Ultimately, politics is done by the people. And even if the result of the vote may go against the will of the people in the current situation, the vote result may change next time if individual members of the parliament are pressured heavily by public opinion. That's what I think.
Bloomberg's Sang-mi Cha joins us now for the latest. So, Sang-mi, there has been speculation that even the ruling party could end up boycotting the vote altogether. What are the expectations right now about how this vote will go at the National Assembly?
Yeah, so in terms of schedule, first, the opposition party is pushing for the impeachment vote right around 7 p.m. tomorrow, and that's Saturday. So it will be a long night for the lawmakers and for us this weekend. So to pass an impeachment motion, it usually requires a 2/3 majority of the parliament. And so that means 200 members of the Korea's 300-member National Assembly have to vote in favor. So that means given that the opposition party has about 192 seats right now, we need a minimum of 8 defections from the ruling party to pass that motion. Well, and some of the President Yoon Suk-yeol's Conservative Party, just like we heard it from the main opposition leader Lee Jae-myung yesterday as well, that the Conservative Party members might have the intention to join the opposition and distance themselves from the unpopular leader. But that would mean that they would have to go against the party line, which now is to actually not impeach the president. So Lee Jae-myung, the main opposition party leader, is telling us that it could be quite difficult this time around, but he will keep pushing for that. And so speaking of unpopularity, we're very closely watching the weekly Gallup poll on the president's approval rating. That will be out in less than an hour from now. And see, at the moment, Yoon has the support rating of 19%. And recalling that his lowest was 17% in November, it's been on a downward trend. So we believe that this rating may further decline. And remember that the lowest for any Korean president was for Park Geun-hye at 4%, right around the time when she was also going through impeachment herself. So she was ultimately ousted in 2017. So that will be a very important gauge for us to find out what Koreans are thinking about this martial law development.
So if the impeachment vote at some point goes through, what are some of the who I should say are some of the top contenders for the job?
Yeah, so first, when the motion goes through, then next it's sent to the Constitutional Court. And then there's no set time or schedule here, but as a reference, again, talking about the impeached president, Park Geun-hye, back then it took about 3 months until she was impeached, and then it took around 2 months again until the new president came and took power back in 2017. So we'll need to keep watching how this unfolds, but there's no set date. And when we look at the markets today, actually, Kospi, the benchmark Kospi has opened 0.5% higher, and that's the first gain since the martial law was declared this week. So it would be a good chance to see how the market does today. A lot of the investors, just like you mentioned, have been saying that this is indeed a buying opportunity, because looking at the longer term, it would be very good momentum, very good timing to buy some of those cheaper stocks.
Yeah, opposition leader Lee Jae-myung really saying that, trying to sell South Korean assets as well. Bloomberg's Sang-mi Cha there with the latest on the political changes happening here in Seoul. Now, South Korea's finance minister is also playing down the impact of this week's failed martial law decree on the economy and the markets. Sang-mok told me exclusively that fears about the country sliding into a recession next year are excessive.
최근에 그 비상계엄 조치가 이제 헌법과 법률에 따라서 신속히 해제됐기 때문에 The recent emergency measures were quickly lifted in accordance with the law, so I think the impact on the market was very limited. I'm not sure if that's the right answer to the question, but I think that South Korea is now operating a system that is better than the market safety measures. That system is working well, and as a result of its good performance, I think we are now finding some degree of market stability. In the future, if we face even more uncertainty, systems related to the market will work well, and we will be able to respond because we are ready. If there is any short-term volatility, the Bank of Korea and the financial authorities will work together to provide unlimited liquidity to the market. We will also take measures in this regard. Our basic direction has been to take various measures to stabilize the markets as much as possible. So once that was done, the Bank of Korea and the Financial Services Commission announced specific measures. In the future, if such volatility increases, we will take similar or more drastic measures when necessary.
I had a chance to sit down with the main opposition leader, Jae-myung, very recently, and he mentioned how the instability that we're seeing in the markets right now is all to do with the administration, that once the president is removed, things would calm down, the foreign investors would come back. How do you respond to that?
글쎄 뭐 정치인이 어떤 말씀하신 거에 대해서 평가하는 건 맞지 않고요.
Well, it's not right for me to evaluate what he said. As far as I know, fundamentals of foreign investors' investment in Korea is affected by the fundamentals of our economy. As I mentioned earlier, because our various systems are working well, the impact on the economy has been very limited, and it's well managed. Even in the past, we have seen that the impact of non-economic factors was not a major concern for foreign investors. Rather, their sentiment has been swayed by fundamentals of our economy. The Korean government is stepping up its effort to strengthen the fundamentals of our economy. It is stepping up these efforts even further, and I believe this is a way to encourage foreign investors to invest in Korea a little more.
In the immediate aftermath of the martial law declaration, the lifting, and of course potential impeachment proceedings, how are you planning to restore investor confidence, not only in the Korean markets, but in the Korean economy and fundamentals?
네, 아까 말씀드린 것처럼 이렇게 비경제적인 요인에 의한 어떤 충격이나 불확실성은 과거에
As I mentioned earlier, we have seen such shocks and uncertainties caused by non-economic factors in the past, but they were temporary and limited. We believe that the Korean system is working well in these areas. But the basic trust of foreign investors in the Korean economy is actually based on concerns that the Korean economy's potential growth rate and growth momentum are shrinking. So the Korean government is making efforts to increase the robustness of the Korean economy, innovation, and social mobility through the creation of a blueprint. And recently, due to uncertainties in global trade, we are making efforts to strengthen the competitiveness of some industries and others that are less competitive among the more traditional industries.
How are you preparing for the Trump administration?
지금 한 두 가지 차원에서 접근을 하고 있는데 하나는
We are approaching this from two different angles. One is through our efforts in trade diplomacy. The U.S.-Korea alliance is strong, so we are making similar efforts as we did when the Biden administration was inaugurated. This is to minimize this uncertainty that our companies and industries face by strengthening the negotiations between government in parallel with the inauguration of the new administration. The second is to take this as an opportunity to strengthen our competitiveness in key industries such as semiconductors and automobiles, as well as traditional industries such as petrochemicals and steel. We're preparing for crisis factors in each sector. We're also preparing measures to maximize the opportunities in areas where there are opportunities, and we are in communication with companies and industries.
global tariffs, not to mention the political uncertainty in South Korea. What are the chances that we might fall into a recession next year?
지금 리세션은 얘기하셨는데 그 내년도에 경기 침체 우려가 있다는 말씀은 너무 과도한 우려라고 생각이 들고요.
I think it is too excessive to say that there is a risk of recession next year. Korea's growth rate next year, projected by the International Monetary Fund or the Bank of Korea, is at or near its potential level. Therefore, we will respond to uncertainties by combining appropriate macroeconomic and macro policies. We will also make efforts to strengthen policies that would target more vulnerable groups.
South Korean Finance Minister sang-mok there speaking to us exclusively. Coming up, France's parliamentary power broker Marine Le Pen speaks to us exclusively on Bloomberg, telling us a new budget deal is possible within weeks. We get the latest when it comes to the French political turmoil next. This is Bloomberg.
C'est pourquoi je nommerai dans les prochains jours un Premier ministre.
This is why I will appoint a new Prime Minister in the coming days. I will ask them to form a government for the general interest, representing every political force within the spectrum of parties destined to govern, and that they could join or at least agree not to bring it down. The Prime Minister will consult and form a more effective government at your service. Its priority will be the budget.
French President Emmanuel Macron there in a televised speech. Let's take a look at our futures in Europe are opening this morning after what has been an extraordinary week of geopolitical volatility as we continue to wait to see what happens when it comes to the next Prime Minister appointment by Emmanuel Macron and whether that person can potentially get these budget talks for 2025 back on track, clearly facing a lot of the same challenges as their predecessor. Euro Stoxx 50 futures looking pretty weak at the moment as investors really try to look beyond the French crisis. But of course, we do have those US payrolls numbers in focus for the Friday session. Well, one measure of French bond risk fell on hopes that lawmakers will strike a deal on next year's budget sooner than expected. The far-right leader, Marine Le Pen, told us exclusively that a budget can be passed in a matter of weeks if the next Prime Minister is willing to narrow the deficit more slowly.
To ask him to resign would mean to disturb our institutions. Once again, it's his decision. Now, if there is a political crisis, an institutional crisis, and if he can no longer dissolve the assembly, if reshuffle serves no purpose, then the French constitution only leaves one other option, which is his resignation. But that wouldn't be a drama either. There would be new presidential elections. General de Gaulle, you know, designed our institutions, and they are very solid. They are extremely solid. Everything's done to make sure that the life of the nation can carry on and not create disturbances that can't be dealt with. If he were to resign now, there would be new presidential elections and new legislative elections.
But are you worried about these crises then leading to severe market reactions?
No, because the reality is that what worries the markets is the economic situation in France. What worries the markets is the lack of perspective concerning reducing deficits. It's the absence of savings at the state level, the increase of taxation on companies that worries the markets. And in fact, you've seen the markets have remained extremely stable over the past few days since the announcement of the no-confidence vote, and even after the no-confidence vote. In reality, they had concerns at the moment of the dissolution in June. But for the moment, whether it's the spread between France and Germany, the rates, or the markets, but for the moment, whether it's the spread between France and Germany, the rates, or the markets, for the moment, everything is relatively calm. Because once again, they realize that anyway, there has to be at all cost another policy other than that envisaged by Mr. Barnier.
But the market is probably looking at the fact that the ECB is standing close and that there's a want from France of getting the deficit down pretty quickly.
Well, yes, but once again, there's a long way to go between wishes and reality. Mr. Barnier wanted to reduce the deficits. He's increased them by 12 billion. You see what I mean? So, once again, using a hammer to bash French people over the heads with taxes, when we're the country with the highest rate of taxation in Europe, is not the solution. But it's the only solution that French leaders have implemented for years. It doesn't work. Look at the situation we find ourselves in. So help companies, enable them to do business, reduce production tax, reduce the cost of energy, or at least reduce it to the same level as the cost of production in France. Those are things that will allow companies to develop and thus create employment.
Voilà, ça, ce sont des lignes qui vont permettre aux entreprises de se développer et donc de créer de l'emploi.
But Madame Le Pen, I mean, first of all, the Barnier actually proposal means that GDP would be the deficit of GDP would be 5% in 2025 compared to 6% this year. So it's going down.
Non, il augmentait de 12 milliards le déficit.
No, the deficit rose by 12 billion. The deficit rose by 12 billion. But you know, the head of Safran, which is a major company, has just given an interview. And what did the head of Safran say? He said Barnier's budget is a bad budget. So, in reality, the fact that it's last year's budget that's applied, however unfair it was socially, is actually rather good news for companies. There are a certain number of entrepreneurs in economic circles who are in fact pleased about the no-confidence motion because they consider Mr. Barnier's budget was worse than last year's budget, and that's saying something.
French National Rally leader Marine Le Pen there speaking exclusively with our Francine Lacroix in Paris. We have more ahead on the Asia trade. This is Bloomberg. This is the Asia trade, the latest when it comes to corporate headlines we're following, and Intel has added 2 semiconductor industry veterans to its board, days after forcing out its CEO, Pat Gelsinger. Eric Maurice is a former ASML chief executive, and Steve Sanghi led Microchip Technology. They join Intel as independent directors, with the company facing the biggest crisis in its 56-year history as it works to restore its technological edge in chips. A US federal judge has rejected Boeing's plea deal that could have allowed the company to avoid criminal prosecution over 2 fatal 737 MAX crashes. The judge sided with family members of the victims, calling some of the deal's provisions inappropriate and against the public interest, and it could have led to a revised plea agreement.
Right, Heidi, I'm in Gwanghwamun here in Seoul in sub-zero temperatures where protesters are still turning out in force. Behind me early in the morning, protesters wanting the resignation of President Yoon Suk-yeol because of what they say is the crisis that he's caused by imposing and then lifting martial law. Ahead of me, there are more protesters now from both sides of the aisle, some wanting President Yoon Suk-yeol to resign, others wanting him to stay. Right now, we're seeing a very polarized society here in South Korea, and that, of course, is a big threat for the markets, for the economy, at a time when we continue to see the economy reeling, exports really starting to slow down already, and the finance minister now telling me that he will impose new measures as necessary to stabilize markets.
And Shery, we aren't just getting these latest developments crossing the Bloomberg, right? That South Korea's ruling party's Han saying that Yoon in office puts people in danger, that there is a need to suspend his duties soon. And this really, Shery, goes to the conflict that we're seeing at the moment, right, in terms of the domestic pressure from not just from investors and the broader markets, but of course from the voters, from the people that are on the streets, the protests that you've been attending and the protests that are there sort of on the ground at the moment, right? You know, we're hearing from that ruling party leader at the moment.
It's so interesting because we have seen the ruling party say that they will oppose the impeachment of the president. At the same time, they want to expel him from the party and create this distance given how unpopular that imposition and lifting of martial law was. Can they have their cake and eat it too is the question, because it really doesn't bode well for them to trigger elections early next year. Well, probably they'll get hammered. And it's also the trauma from 2016 when they actually impeached President Park Geun-hye, and the ruling party suffered years after that in order to regain the confidence of the South Korean public. Now, I spoke to the opposition leader just recently, and he admits, though, that it may be difficult to get enough support from the ruling party to impeach President Yoon Suk-yeol, at least when it comes to this week's vote. But Jae-myung tells me that he remains committed to removing the president, even if the president does survive the initial impeachment vote. Take a listen.
정치는 결국 궁극적으로 국민이 하게 되는데
Ultimately, politics is done by the people. And even if the result of the vote may go against the will of the people in the current situation, the vote result may change next time if individual members of the parliament are pressured heavily by public opinion. That's what I think.
The martial law declaration really caught international partners by surprise, especially key allies like the United States. How are you going to restore confidence in the relationship with South Korea?
아마 전 세계에서 대한민국
It is probably a very confusing situation for the rest of the world to see South Korea. Something that couldn't have happened has happened. But it's not a common situation in South Korea, and it's a problem caused by the very special character of a certain individual named Yoon Suk-yeol. It can be seen as a situation where disease penetrated into a healthy living thing called Korea. Usually, the president mobilizes the military and the police to attempt to destroy the constitutional order and strengthen his power through a de facto coup. But this was thwarted by the people and the National Assembly within a few hours, wasn't it? This shows the healthy state and the true power of Korea. This person, Yoon Suk-yeol, is just a special, exceptional, and temporary phenomenon.
We have seen Japan also play an active role in the trilateral alliance with South Korea and the United States when it comes to pushing back against not only North Korea, but also against China. What will the relationship with Seoul look like under an administration that's led by you?
대한민국은
Korea is a peninsula located between continental powers and maritime powers. In fact, it could be very diplomatically and internationally vulnerable. But on the other hand, it has opportunities at the same time. We cannot continue to be hostile in our relationship with Japan.
The so-called Korea discount has been in place for a long time, even before the Yoon Suk-yeol administration. How do you plan to overcome that, especially when it comes to issues like short-selling bans?
윤석열 대통령 이전에 있었던 코리아 디스카운트는
The Korea discount that existed before President Yoon Suk-yeol was caused by the division of the country and military confrontation. And there was also the abuse of corporate management control system and stock price manipulation. So, we need to improve these things institutionally. The special problems that have risen in the Yoon Suk-yeol administration, the escalation of geopolitical risk, absence of economic and industrial policies. These things will be resolved when the administration ends and the risks that existed before that will be institutionally improved. Short selling is a necessary system. We need to allow it reasonably and fairly within the necessary boundary to make sure that it is not abused. We need it for the benefit of MSCI.
Korean Democratic Party leader Jae-myung speaking to us in Seoul as we're getting more clarification on those latest comments by Han Dong-hoon, the leader of the ruling party, now saying that he believes Yoon should actually be suspended from duty. He's saying that keeping President Yoon in office risks putting South Korea and its people in danger. He also saying that he earlier, as we established before, had pledged to stop impeachment, but he's now confirming from credible evidence, according to Han, that Yoon had ordered the arrest of key politicians on the night that he declared martial law. So we'll continue to watch how that expected impeachment vote goes on Saturday. The expectation before was that the ruling opposition, or the ruling party, would actually oppose the impeachment. But now with the leader of the ruling party that is saying that President Yoon should actually be suspended from duty. Could the president actually be impeached? This weekend, Haidi, will be a key concern for markets and anybody watching the political developments here in South Korea.
Yeah, certainly a question of credibility, if not broader contagion for the markets, right? Shery, take a look at some of the other stories that we're following, particularly when it comes to global geopolitics. And Syria's army says it has retreated from the city of Hama as rebel forces advance, increasing the threat to President Bashar al-Assad's hold on power. Hama lies about halfway between Damascus and Aleppo, which opposition fighters captured last week in a surprise attack. The rebels are led by Hayat Tahrir al-Sham, who's a former al-Qaeda affiliate that's designated a terrorist organization by the US and others. Elon Musk has met with lawmakers on Capitol Hill to promote his effort to cut at least $2 trillion from the US federal budget. Musk and his partner in the so-called Department of Government Efficiency, Vivek Ramaswamy, discussed ideas such as ending work-from-home options for government workers. Their effort faces challenges, including possible bipartisan pushback on Capitol Hill. Well, China is ratcheting up sanctions on the United States in retaliation for planned arms sales to Taiwan. The targets this time are 13 military companies, mostly specialising in drone making. Let's get the details with our Chief North Asia correspondent, Stephen Angle, who joins us out of Hong Kong. So, Steve, what do we know?
Well, obviously, China is looking at ways it can retaliate against not only these Biden chip curbs that he escalated last week, but also, of course, promises by the incoming president-elect Donald Trump in the next administration to be quite harsh as far as, of course, tariffs, the threat of tariffs, even though that this latest sanctions coming out of Beijing is not actually packaged under that narrative. It is under the old trope, if you will, of protesting against U.S. arms sales to Taiwan. But again, it is a way for China to find ways to retaliate against those pledges and actual actions by the current administration from the United States. So what is happening this time? You're right. 13 companies, military-related companies in the United States. Most of them are drone-related companies in the United States. Essentially, the Foreign Ministry of China says the assets of these firms have been frozen, at least those that are in China, and no China-based entities can transact or work for them. These include Kratos unmanned aerial systems, Brink drones, as well as Shield AI. Shield AI is one particular U.S. company that is trying to build its technology to not rely on GPS or remote piloted drones, because they've found on the battlefields, as well as, of course, drone technologies from places like Russia, also Iran, and also they mentioned China in some testimony by the CEO of Shield AI, that these so-called adversaries, if you will, have been able to jam GPS drones. So again, this is a highly symbolic move by Beijing. However, in past incidents, we've seen that supply chain snarls do occur when China puts these kind of sanctions in place.
And Steve, a key U.S. House Republican now criticizing President Biden's latest chip restrictions on China as being too lenient. What's the complaint?
Yeah, well, this is a senior House representative, John Molinar, essentially saying that Biden's latest chip curbs on high bandwidth memory chips and others to China essentially have too many loopholes that could let Chinese tech companies such as Huawei to continue acquiring U.S. technology through loopholes. He's written a letter to the U.S. Commerce Secretary Gina Raimondo saying parts of these new curbs give too much leeway to Chinese production chains, basically applying, for example, different restrictions to different parts of Huawei's chip-making partner like Semiconductor Manufacturing International. So there's too many loopholes. And I think the real key to this whole statement from Mr. Molinar is that he's asked the Commerce Department to save all communications, all documents related to these latest curbs so the incoming President, Donald Trump, can review them and review any potential loopholes, a signal, obviously, that the Trump administration could be a little bit tougher on China over these tech curbs.
Our chief North Asia correspondent Stephen Engel there with the latest on China and the U.S. This, as we continue to watch the latest developments here in South Korea, we take you to that press conference by the Democratic Party main opposition leader Lee Jae-myung. And we are now expecting that impeachment vote to happen. But remember, the Democratic Party only has 192 seats in parliament. And for that impeachment motion to pass, you need 200 votes. That means that you need the ruling party lawmakers to actually pass this bill as well. Will they have the vote is a key question at a time when we're already hearing from the ruling party leader Han Dong-hoon himself as well, saying that he believes President Yoon Suk-yeol should be suspended from duty quickly, as keeping him in office risks putting the people in danger. We're still trying to figure out if this actually means that he will not oppose the impeachment bill anymore. That was his stance earlier. Has he changed his tune and he just wants Prime Minister Han Duck-soo to actually take over as interim caretaker? We'll try to figure this out as we get the latest developments here in Seoul. This is Bloomberg. We're still hearing from the Democratic Party leader. He's the main opposition, and of course, he could become the next president if President Yoon Suk-yeol is removed. He's now saying that he's moved up the vote on the impeachment at Parliament. It was supposed to be Saturday evening. Now they're saying that it will be 5 p.m. on Saturday. And Haidi, of course, we continue to watch these developments as we're trying to figure out if the ruling party will indeed oppose the impeachment bill.
Critical few hours coming up ahead, right, as we continue to watch that. We'll be bringing you the latest as they get to us. It seems like a little bit of a change in sentiment and a change in opinion there. In the meantime, we'll continue to watch these markets, and in particular crude markets in focus after OPEC Plus appears to be accepting that its mission to defend oil prices will be a protracted one. IEA data suggesting that glut looming throughout the course of next year. Let's get some more from our Energy and Commodities Managing Editor, Clara Marquez, who joins us now. And Clara, even the timing, of course, of this meeting being pushed back, these protracted negotiations kind of speaks to the difficulties for OPEC Plus members right now.
You're absolutely right. I mean, really, they are bowing to the inevitable here, buying themselves some time as we go into 2025. Remember, this is the third time that they've delayed the revival of oil production. It's a recognition of where we are in crude markets. OPEC needs the price to be well above 70 for them to really start bringing oil back. It's now at 72, come down a fifth since the summer, since about July. It's a recognition of the surplus that we're seeing in the market, as you mentioned, coming from the Americas largely, from the US, from Canada, from Brazil. It's a recognition of the weakness of demand. The Chinese market still looks pretty bad, and it's unclear that that will improve anytime soon. And they're buying themselves a little bit of time ahead, of course, of the inauguration of President-elect Donald Trump.
At a time also when these OPEC Plus nations do actually need that revenue from oil, right? So what can we expect from them going forward in 2025?
Well, Well, you're right. So both Saudi Arabia and Russia, if you think about the sort of main participants here, Saudi needs it for its economic transformation. Russia needs it to keep its war going in Ukraine. Both of them really do need this revenue, but the market just isn't going their way. I mean, we're looking at a market, if you look at the IEA figures, they're expecting a surplus even if they don't increase production. We're looking for some analysts at figures around $60 a barrel. I mean, that is a very, very poor market. So yes, they've largely kicked the can down the road. It's difficult to see how they can bring this back very fast.
When it comes to that sort of uncertainty going into 2025, you mentioned the sort of potential extreme maximum pressure, I should say, tactics from Trump, the tariff and the broader trade war concerns with China and perhaps, other trading partners as well. Is it possible to gauge the supply and demand situation from here in terms of how that could be impacted?
Well, it's difficult to say because it'll depend not only on what Trump actually does, but how effective it is. Remember that it's one thing to say that you're imposing sanctions, one thing to actually put the decree out. It's quite another to enforce it. We know that so much has built up over the last few years in terms of a shadow fleet, that structure that has been built to keep ferrying Iranian oil to China. Difficult for Trump to curb that. However, if there is an increase there and if he does bring down Iranian production, Iranian exports, that does leave a little bit more room for the Middle Eastern economies. The other big unknown, of course, is China. Can there be a revival in production? It does look very difficult at the moment. And remember, we're also looking at structural changes that are not really bullish for crude.
Energy and Commodities Managing Editor Clara Ferreira-Marquez there. Well, India's central bank is expected to leave interest rates unchanged today. Inflation accelerated to a 14-month high. Still, a sharp miss on GDP growth has raised speculation that the RBA could soon ease. Bloomberg's Avril Hong joins us now for more. So, policymakers, they're facing this growth-inflation divergence.
Absolutely. I think that is the key concern for RBI policymakers that's really clouding the outlook, because you look at the GDP growth print just last week, it was a big shocker. It missed by 160 basis points, and none of the economists polled by Bloomberg saw such a slow pace of expansion coming. So that's really what's fueling this idea that the RBI meeting later today is going to be a live one. That being said, consensus is still for it to keep rates unchanged at this meeting, as it has for almost 2 years now. If it does cut, it could be heeding the call, so to speak, of the finance minister, commerce minister, Bloomberg Intelligence in recent months for the RBI to sort of get on with cutting rates, to start the easing cycle. But the complication for the central bank, and as you alluded to this earlier, is the surge in inflation because of volatile food prices. Although core inflation remains quite subdued, it was quite telling recent comments from the RBI Governor Shaktikanta Das talking about how price stability is as crucial as growth. So it gives you the sense of a central bank that thinks its job fighting inflation is not done just yet. The worry is that if it doesn't cut this time around, that it might be forced to a bigger cut in February when it next meets. Many market watchers, though, think that even if we don't see a cut to the benchmark rate, we might see it tweaking liquidity, which is tight in India, and this could come in the form of a trim to the cash requirement ratio, Haidi.
And of course, his term is technically set to expire on Monday. Do we know when a reappointment or a new appointment is likely to be announced?
Yeah, there's been no clarity as yet of when his 6-year term, which ends next week, whether this is going to be extended or potentially who a successor might be. There's just been no clarity on this. And even himself, when he spoke at a recent credit forum, he said, he was asked if he was going to be sticking around. He said he's got a lot on his table, doesn't really have time to think about these things. So he himself says that we'll see what happens next. And what's interesting is that, Shaktikanta Das is a man who's kind of stuck to his guns, resisted pressure to cut rates, and the recent growth miss is what's kind of spurring speculation of the future, whether he remains as the RBI governor. And it's also worth noting that the last time the government actually announced an extension of his term, this was back in 2021, they did it more than a month in advance. Now we're coming up less than a week to the expiration date, and we haven't heard anything. The concern for investors, I think, also is this is a board that has 6 members, and they're kind of stocked half and half. So we have half newly appointed members, the other half senior members, and we're not sure whether these senior members are still going to be around at the February meeting. So the concern here, I think, is that there might be some complication to decision-making, Haidi.
Avril Hong there with the latest as we look ahead to the RBI and some of those uncertainties to play out in the coming hours. More ahead on the Asia trade. This is Bloomberg. We are getting some breaking news when it comes to another appointment being announced by the incoming Trump administration. Donald Trump naming David Sachs as the White House AI and crypto czar. Now, we know that David Sachs is a venture capitalist, a well-known investor who has taken a bit of a meandering path to his support of Donald Trump, and in particular of J.D. Vance, because previously, in previous years, he's been a supporter of Mitt Romney. He's also donated to Hillary Clinton, but he's now all in on Trump, and he has been appointed as the White House AI and crypto czar, and he's been heavily involved when it comes to that campaign process and fundraising. We have, of course, seen Bitcoin just rising to that past that 100,000 level, but a bit of a slump there as we see it trading at the moment, Shery.
And we're also watching South Korean assets. The Kospi now erasing earlier gains, as we heard from the ruling party leader, that he sort of changed his stance. He wants President Yoon to be suspended from duty quickly, as keeping him in office risks putting the people in danger. Whether or not he will actually oppose or not the impeachment bill that could be voted on as early as 5 p.m. on Saturday is a key question right now. From Seoul, this is Bloomberg.